So we are going to commence the sum. As I'm going to read the sum and as well as explain you. So here the Ruma Limited is first purchasing the plant 1. This is the plant 1 on 1st April 2015 for rupees 2,40,000, and the second plant on the 1st July 2016 for rupees 1,60,000. And then what happening is that on first whatever the plant which was bought in 1st April 2015, which was sold for rupees 1,60,000 on 1st January 2018, and we are acquiring a new plant on the same date. So on 1st January 2018 we are getting the third plant. Okay, and the payment of this plant here it is mentioned, that is on 2018, 19, 20. Here as on 2018 there is no interest as such, because we are paying at the same date. We are purchasing at January 2018 and we are paying on the same date, so there is no interest cost in that. No interest element in that. And for rest of the two, the interest element are 8,000 and 4,000 respectively, and the depreciation is charged at 10% on the diminishing balance method. So diminishing balance method, we know that out of our carrying amount we will reduce the 10% value. So here they are asking us to find out the three things, that is cost of plant bought on 1st January 2018, that is they are asking us to find out the value of the third plant. And then loss of sale of plant is nothing but the first plant which is sold, in that what is the loss going to compute, that one we have to find out. And the third question is they are asking us to derive as the closing balance for the plant 2 and the plant 3, that is this one and this one we have to derive it. So how we are going to approach this sum, we are going to see. So but before we are starting the sum, I am giving some understanding notes. See here, the sum is on, as you can see, it is ending on 31st March 2018. So it follows the period of 1st April to 31st March. So it follows 1st April to 31st March. And then generally, on the asset we need to consider only the cost of the asset, not the interest element. As you can see in the payment element for the above three, here the amount is included along with the cost plus the interest element of 8,000 and 4,000. So what we need to do, we need to reduce such amount from the payment price, and interest has to be separately recognized in the profit and loss account separately. And then as general rule, depreciation has to be calculated on a proportionate period. That is, if the asset is there for some 3 months period, means we have to calculate 3 divided by 12. If the asset is there for 9 months, then the 9 divided by 12, like that. So we can proceed towards the sum. So for the plant 1, so first we can see that the cost of the asset for the plant 1 is 2,40,000. I have mentioned the same. And then depreciation, so here when they are selling is 1st January 2018. So till date we need to till 1st January 2018 we need to calculate the depreciation. So this is for the whole year depreciation, this is for the whole year, and this is also for whole year. And for 1st January 2018 alone, from 17 to 18, that is we need to calculate only for the 9 months, and we need to depreciate as per diminishing balance method. That is, we need to reduce from the WDV value of such asset. So here we are reducing. So here we are reducing this cost, and we are arriving at the cost of the asset as on the sale date. And then we are selling this asset at 1,60,000 rupees. So therefore a loss, the actual carrying amount of the asset is 1,79,820, whereas the asset sale value is 1,60,000. Therefore the loss on sale of such asset will be 19,820. Okay, so first we have found out the loss we have computed, and then second thing, we are going to compute the closing balance of plant 2 and the plant 3. So we are proceeding towards the plant 2. So here the plant 2 which was purchased on the 1st July 2016 at a value of 1,60,000. So we are taking at 1,60,000 and then we are depreciating till March, since it is purchased on July 1st, April to June, there won't be no depreciation, so we need to calculate for March, so July to March for 9 months, and then we need to reduce the depreciation for 31st March 2018. So we are computing the closing balance for the plant 2. Whereas before calculating for the plant 3, closing balance for the plant 3, we need to assure this is the plant 3 which we are purchasing. Here the cost which includes the interest element. So what we are first doing is that we are taking the future payments for 2018, 2019 and 2020, and we are reducing the interest cost from them. And after reducing, we are arriving at the cost of the asset. And then from that we are reducing the depreciation. See, the asset is purchased on the 1st January 2018 only, so there will be only 3 month depreciation, that is Jan to March. So we are reducing such a depreciation, then we are getting the closing balance of plant 3 as 1,17,000. As you can verify in the solution given by the institute, here we have arrived all the values correctly. And the main thing is that whatever question we have asked, we need to solve it in a rough basis, and then we need to put only the answer as required in this question. And this question itself is a 6-mark question, and this is going to be a very one of the important question which you can solve, practice on your own. So thank you.